But now with the latest business and market news, over to Jayne Edwards.
Thanks, Alan. A sharp rally in the US on Friday has raised the prospect of a better start to the week on local markets. The buyers came back to Wall Street, lifting the Dow by 0.5% and the broader market by more than 1%. The share market rebounded after a week in the doldrums on news that US consumer sentiment has hit a 3-year high and that Saudi Arabia has quietly increased its oil production to fill the shortfall from Libya. Concern over oil supply has dominated world markets this week as the turmoil in Libya intensified. In New York, the oil price jumped by 14%, while in London, the more volatile Brent crude finished above $112 a barrel. All eyes are on the Middle East in the coming week, and Wall Street analysts are warning of a bumpy ride ahead for share markets. You can see the evidence of oil price worries in world stock markets over the week. Europe and Japan slumped by 3%, while the US and Australia lost 2%. Now with all the news on the local front, here's Marcus Padley.
Well, a bit of a scary week this week as the market responded to the Libyan oil price spike, which threatens global economic recovery. Although if the Iraq wars are anything to go by, it will be a temporary affair. Gold price was up as well. A lot of ex-dividends this week. With Telstra ex-dividend on Monday, 14 cents. This week we also had to contend with the earthquake in Christchurch, which didn't do the insurance companies much good, IAG in particular. And there were cyclones, or Cyclone Carlos in WA, which shut in some of the iron ore operations. And the iron ore stocks haven't had a great week, including Fortescue, of course, which is reeling from the ASIC court win against Andrew Forrest. We also saw 130 companies out of the ASX 300 report results this week. Big week for results. The worst performances on results came from Pacific Brands, Infogem, which is the old Babcock & Brown, Virgin Blue, Rock Oil, BlueScope Steel, lots of others. The best performances came from What If, which is recovering from a 44% share price fall. Ozstar, bit of bid talk there. Caltex that doubled their dividend. Aristocrat Leisure back into profit. Other ones, Iluka, Amcor, Emeco, who had a special dividend, all good. We also saw announcements this week of the BHP share buyback, which looks fabulous, but before you get too excited, let me just warn you that the Woolworths share buyback saw an 88% scale back. This one's likely to be even more popular. We also saw Origin up at the end of the week on the back of a Chinese LNG deal. And in the media sector, Kerry Stokes engineered a bid for the Seven Media Group from WA newspapers. We had thought that would happen the other way round one day. And we also saw the Billionaire Club put Lachlan Murdoch in charge of the 10 network. Their share price didn't do very well on the back of that. One final riddle. The Australian economy, we know, has been knocking the socks off the US for the last couple of years. So tell me this, Batman, why, since the bottom of the global financial crisis, is the US market up 94% and we're only up 58%? Winner of the week this week is aluminium extrusion company Capral, which was up 29% after announcing a $6.7 million profit after 7 years of losses. And loser of the week was WA Newspapers, down 12% after its bid for Seven Media Group in an accelerated rights issue.